Fed holds rates steady. Powell's insights, market reactions. A Federal Reserve's decision sparks debate. Rates hold steady amid dissenting voices. On Wednesday, the Federal Reserve made the significant choice to retain its current restrictive interest rate policy, even as two members of the board expressed their disagreement. Following the Fed's 2 p.m. ET policy announcement, the S&P 500 index initially held a modest gain, while Chair Jerome Powell addressed reporters at a news conference shortly after. Investors are keenly anticipating earnings reports from tech giants Microsoft and Meta platforms as trading approaches its close for the day. The backdrop to the Fed's decision was a surprisingly strong report on second quarter GDP growth, although a closer look revealed underlying weaknesses and a slight uptick in core inflation that surpassed expectations. Earlier in the day, data from ADP suggested a rise in private sector employment for July, adding to the complex economic picture. 2:53 p.m. E.T. Powell addresses the larger fiscal bill. A significant aspect of the legislation is the permanence of existing laws, Powell noted during his remarks. While he indicated there could be some stimulative effects from these measures, he did not foresee any major impact on the economy. 2:52 p.m. ET. Market reactions to Fed decisions. As Powell continued his address, the S&P 500 remained largely unchanged, down from a pre-conference gain of 0.2%. The Dow Jones dropped 0.2%, whereas the Nasdaq Composite saw a slight increase of 0.3%. 2:49 p.m. ET. Current policy perspectives. During the briefing, Powell elaborated that most members of the Federal Reserve perceive inflation to be somewhat elevated and believe that the labor market aligns with targets for full employment. This combination leads to the conclusion that a slightly restrictive monetary policy is warranted to fulfill the Fed's dual mandates of price stability and job creation. 2:44 p.m. E.T. Powell warns of labor market risks. We are witnessing a simultaneous decline in both demand for and supply of labor, Powell stated. Yet he pointed out that there are notable risks to the labor market stability. He emphasized the significance of tracking the unemployment rate, noting that the threshold for job growth necessary to keep pace with labor force expansion has decreased. 2:43 p.m. E.T. Trump tariff implications. Responding to inquiries about tariffs imposed by the Trump administration, Powell remarked that their effective levels appear stable, but he hinted at the likelihood of further changes. This comment came in the context of ongoing economic uncertainties. 2:39 p.m. Powell's take on current rates. Powell asserted the economy does not appear to be hindered by the existing restrictive policies, according to the majority view of committee members. He categorized the current policy environment as modestly restrictive. 2:35 p.m. ET. Easing services inflation. While inflation in the services sector has shown signs of easing, certain categories of goods are experiencing price pressures due to tariff hikes, Powell explained. The overall implications of these tariffs, he noted, remain uncertain, but the Fed is prepared to adapt its policies based on evolving circumstances. 2:29 p.m. ET. New tariffs on Brazil announced. In related news, the White House confirmed that President Trump has instituted a hefty 50% tariff on imports from Brazil, citing Brazilian policies that negatively affect U.S. businesses and implications for free speech. This decision has already sparked a dramatic drop of over 15% in U.S. copper futures, due to an exemption for refined copper under these tariffs. 2:20 p.m. ET. Dissent among Fed members. The recent policy announcement underscored a division within the Fed, highlighting that Christopher Waller and Michelle Bowman voted to cut the federal fund target rate by 25 basis points. Both members were appointed by Trump and have expressed concerns that if services inflation remains under control, rate cuts could be considered. 2:15 p.m. ET. Inflation and jobs data at the forefront. The Fed is gearing up for the release of the core PCE price index data for June and the July jobs report later this week. Just yesterday, the GDP figures indicated that the core PCE inflation rate registered at 2.5% annually for Q2, slightly above forecasts. The ADP report also reflected an increase of 104,000 jobs in July, exceeding initial estimates. 2:12 p.m. ET. Moderated economic growth. Despite a headline growth rate of 3% for the second quarter, the Federal Reserve indicated in its statement that recent data shows a moderation in economic activity over the year's first half. 2:06 p.m. ET. High economic uncertainty. The Fed's statement reiterated that uncertainty about the economic outlook remains considerably high. This uncertainty persists in spite of recent trade agreements and legislative measures that somewhat eased immediate fears over potential inflation spikes. 2:03 p.m. ET. Stock reactions post-Fed announcement. Following the Fed's announcement, the S&P 500 saw a slight uptick of 0.2%. Typically, stock prices fluctuate following Federal Reserve announcements, particularly as Powell begins his address. 2:01 p.m. ET. Fed maintains rates, despite dissenting votes. The Federal Reserve decided to keep the key policy rate steady, setting the target range from 4.25% to 4.5%. This situation marks a significant moment, as it represents the first instance since 1993 where multiple members of the voting committee expressed dissent. 10:18 a.m. Eastern. Morning gains in the S&P 500. Throughout Wednesday morning trading, the S&P 500 saw a minor rise of 0.1%, while the yield on the 10-year Treasury rose by 4 basis points, hitting 4.37%, 9:23 a.m. ET. S&P 500 futures reflect cautious optimism. Early Wednesday saw S&P 500 futures remain slightly higher, while the US dollar index experienced a rise of 0.6% to 99.27, reaching a peak not seen since late May against a spectrum of advanced economy currencies. Recent data indicated that the likelihood of a Fed rate cut at the upcoming September 17th meeting has decreased from 66% to 60%, prompted by indicators pointing towards stronger core and GDP report indicates a shift. Although the top-line growth rate was impressive, the fundamentals indicate that the economy is entering a slower pace of growth, rather than contracting, commented Bernard Yaros, the lead US economist at Oxford Economics. 8:55 a.m. ET. Imports plummet, exports decline. The robust GDP growth was accompanied by a significant 30.3% drop in imports, following a 37.9% surge in the first quarter. While exports dropped by 1.8%, there was a noticeable disparity between goods and services exports, with the latter rising by 4.4%. 8:50 a.m. ET. Persistent inflation pressures. The core PCE price index, which serves as the Fed's primary inflation measure, climbed by 2.5% at an annual rate in the second quarter, a slight rise from the first quarter's 3.5%. Analysts had predicted a lower figure of 2.3%. Updated inflation data will emerge later this week, along with figures on personal income and expenditures. 8:47 a.m. ET. Smaller odds for rate cuts in the wake of this morning's economic developments, which included surprisingly strong private sector job growth. Market expectations for a rate cut at the September Fed meeting have fallen slightly, now sitting at around 64%. 8:45 a.m. ET. Steady approach on the final sales to private domestic buyers, which eliminate trade fluctuations, showed a marginal rise of 1.2%, marking the smallest increase since 2022. 8:25 a.m. Eastern Time. ADP reports increase in jobs. According to EcoDay, private sector employers created 104,000 new jobs in July, surpassing the consensus forecast of 75,000. Notably, the previous month's reported job losses were adjusted to reflect a smaller decrease of 23,000. The ADP employment data often lacks reliability in predicting the Bureau of Labor Statistics results, but it nevertheless holds considerable importance for upcoming market reactions. Looking ahead, actual GDP growth is anticipated to reach 2.5% for the second quarter, recovering from the earlier contraction. However, preliminary headline figures are significantly influenced by a spike in imports as businesses sought to circumvent impending tariffs. The focus will also be on final sales data, which had previously shown respectable growth. In the backdrop of President Trump's tariff announcements, Powell has adopted a more hawkish stance, suggesting that the Fed might have made different decisions had these tariffs not been in play. Despite the ongoing discussions and his cautious approach, the Fed's stance may evolve further with the latest trade developments. As Trump continues to push for more aggressive monetary policy adjustments, the anticipation builds for the upcoming Fed meetings. With so much at stake, will the Fed maintain its current path, or are deeper cuts just around the corner? The upcoming months will certainly be pivotal. Equities rise as Fed holds rates steady. Market insights. US stocks experience modest gains following Federal Reserve's decision to maintain interest rates. On July 30th, 2025, US equities saw a slight uptick amid fluctuating trading conditions, as the Federal Reserve opted to keep interest rates unchanged, a move that many had anticipated. Investors were keenly awaiting insights from Federal Reserve Chair Jerome Powell regarding potential future reductions in borrowing costs. The Federal Reserve noted that the unemployment rate remains low and labor market conditions remain solid. Inflation remains somewhat elevated, despite a split decision among its governors, with two dissenting. This announcement provided little clarity on when interest rates might be lowered, leaving many investors in suspense. Before the Fed's announcement, stocks had already shown modest gains as traders digested the initial report on second quarter economic growth, which exceeded expectations. However, the details suggested that the economy might be losing momentum, raising concerns among analysts. Brian Jacobson, the chief economist at Annex Wealth Management in Menominee Falls, Wisconsin, remarked, "The Fed probably wishes it had postponed this meeting until next Wednesday to review the employment figures." He added that the current situation is reminiscent of last year, when the Fed regretted not cutting rates in July, leading to a catch-up cut in September. In terms of market performance, the Dow Jones Industrial Average rose by 14.93 points, or 0.03%, reaching 44,647.92. The S&P 500 increased by 13.50 points, or 0.21%, to 6,384.14, while the Nasdaq Composite climbed 85.95 points, or 0.41%, to 21,184.57. As the Federal Reserve is widely expected to maintain its current stance on rate cuts, analysts are eagerly anticipating Powell's remarks for any indications of future policy shifts. This comes at a time when the central bank is under political pressure and is evaluating the impact of tariffs on inflation. Traders currently estimate a 68% likelihood of a rate cut in September, according to data from LSEG. Additionally, the latest ADP employment report revealed that private payrolls increased by 104,000 in July, surpassing the forecast of 75,000. This data is part of a series of labor market reports leading up to the government's payroll report scheduled for Friday. Investors are also looking forward to earnings announcements from several major companies this week. Microsoft and Meta Platforms are set to release their results after the market closes, while Amazon and Apple were expected to report on Thursday. What do you think about the Fed's decision to hold rates steady? Do you believe this will have a lasting impact on the market? Share your thoughts in the comments below. Reporting by Chuck Mikalaitsak, with additional contributions from Nikhil Sharma and Pranav Kashyap in Bengaluru. Edited by Margarita Choi.